So welcome to part 3 of preparing general ledger accounts. So I would like to believe that if you have been following from part 1 to part 2 to part 3 now, you obviously getting a very good balancing in your understanding of preparing general ledger accounts. So like we said earlier on when we started with the earliest sessions, we said that right, for those without accounting background, right? Accounting is very simple. The primary thing that you need to make sure is to understand the general ledger accounts that we gave you under assets, under equity, under income, under expenses, under liabilities. So you need to know as many or almost anything that could fall under assets. All right. So we introduce that to you in your study guides or learning units. All right. You should be able to find that material, right? That gives you a list of accounts or examples of assets. So those examples of assets, we said they are general ledger accounts. The examples of income, expenses, liabilities, all of them are examples of general ledger accounts. So once you can identify in a given scenario the accounts that are involved and the category in which they belong, then you also need to remember the dead click, which says which ones increase on the debit, which ones increase on the credit. Then you will analyze the transaction to see whether there is an increase or decrease in any of the accounts given. So we're going to try a few questions. I think I have about 5 questions, right? That we're going to try so that we can understand, we can learn to understand how we can apply that. So I have the first question here. I'm going to go through it with you using the steps that I would expect you to follow if you are doing an assessment or for you to be able to do a proper transaction. So we have a company called Africa Traders. So Africa Traders bought aircons for 180,000 from SA dealers. All right. So they bought this on credit. All right. For the new offices. So they bought it for the new offices of the entity. So that is very important. The reason why you buy something is important because if you buy for use, then it's going to be furniture or equipment or vehicles. But if you buy it for resale, then it's going to be inventory. So we need to know for what reason something was bought. So we see that they bought it for their new offices. So they want to use those aircons. So this is a non-current asset. And let's say that's office equipment, right? So the question wants us to identify which account will be debited and which account will be credited in the general ledger of Africa Traders. Now, if you go back to this question, you need to identify in whose general ledger are we recording this, because we have 2 entities. We have Africa Traders, which is buying aircons, then we have SA dealers, which is selling. So they want us to record in the books of Africa Traders, which is buying. So from the perspective of Africa Traders, they bought this on credit, so their bank account was not affected. So what happened is their office furniture increased. But now when the office furniture is increased, they now owe some supplier some money that has to be paid. So we can identify 2 accounts here. We can identify office equipment, right? This has increased, right? We also identify that we owe some people, all right? So our trade payables have also increased. Now, office equipment is an asset that increases on the debit. And trade payables is a current liability or a liability, it increases on the credit. So if you want your complete double entry, you go to the office equipment in the general ledger. It has a debit side and a credit side. Office equipment is an asset. So our assets have increased. So we're going to indicate on the debit side 180,000. And the contra account, which is the other account where the other leg of the transaction was posted. Or in this case, we had a debit entry on office equipment. So the contra account will be explaining where was the credit entry made. So it was made in the trade payables control account. All right. So I think that is straightforward. As of now, we haven't introduced to you the journals that would be used, but later on we will also have information or sessions that focus specifically on those journals and stuff like that. So if you look here, that is 180,000. Then we also go to the trade payables control. In the general ledger, we open the trade payables control because we want to record a transaction. So we know that our trade payables is a current liability. It has increased because we owe people now. So the trade payables has increased. So we have to write the 180. We have to record the 180,000 on the credit side of the trade payables control. And the contra account will then give us the other account where the debit entry was made. Correct. So remember, we made a debit entry in office equipment. So they cross-reference one another to complete the double entry to say we acquired office equipment on loan, on credit, basically, and we owe some people 180 as a result of office equipment. So that basically it's a language which if you get somebody who understands the language, if they see this, they just see office equipment and this entry, they will know that we bought office equipment for 180 on credit. All right, it's clear to them because they understand the language. So if you come here under trade payables control, somebody who understands the accounting language will not need to listen to this story here. Just look at the transaction and he knows that we owe some people 180,000. So we bought some office equipment on credit. So by looking at the entries, so the entries that we make are a language to those who understand the accounting language. Right, and I said to you that even if you do not have accounting background, you can always pass the module, and you can pass the module very easily by giving it sufficient practice. Okay, and then you should be able to be fine. Right, then now we have question 2. So under question 2, it's very interesting. All right, so we received this BT. I don't know how to pronounce that, but they received a direct deposit payment of this amount. So somebody just deposited and we find who is this? So we realize it's SA Traders for credit losses recovery. So these guys had disappeared with our money, let's say 2-3 years back, and we decided to write them off, to cancel them, to say, well, whatever. But now they came back and just made a deposit. So obviously we received money in our bank account, right? And the bank account increased. So bank is an asset. So on the debit side, we put 5670, and we want to know where this money is coming from. So it's coming from credit losses recovered. So that's the contra account. In other words, this is the account that we're going to credit because it's income that we have received now. All right, so we go to the credit losses recovered, which is an income account, and income increases on the credit. So what happens is we're gonna record 5670 on the credit side and say the bank was debited. So like I said, if you give this to an accountant and they see under credit losses and they see bank, so it means your credit losses increased by 5670 and the amount was deposited into the bank. So they can look at your general ledger entries and tell you what you are saying. All right, so basically this is what happened. So if you look at how you can read a statement and be able to understand the transactions, you need to be able to identify the general ledger accounts involved. So a direct deposit payment into our bank account, obviously the bank account is affected, and this is credit losses recovered. So if you know that chart that we gave you, which lists assets, income, it has all these things: your credit losses recovered, it has your bank account. So it becomes easy, all right, to identify. Once you identify an account, then you know its category. If it is an asset, it increases on the credit, on the debit. If it is income, then it increases on the credit. So that should not be too hard. So question 3, we are given a story. ABC traders bought merchandise. So merchandise is what we buy for resale. It's goods for resale, right? So merchandise is goods for resale. It's different from goods we might buy for use, right? That's not merchandise. So they bought on credit. So obviously, automatically, you know that they bought it from XYZ on wholesalers for 400,000. Now I'm laughing because it's a bit tricky question. It's not as straightforward as we would love it to be. All right. But if we buy merchandise on credit, if we buy merchandise, just anything, and in anything for resale, we could record that under the purchases account or under the inventory account, right? So both answers are going to be correct. You could record that under the purchases account or the inventory account. So it depends on the inventory system that you use. So if you use what we refer to as the periodic inventory system, right, then any purchase of goods for resale is going to be recorded under the purchases account. So, right, so, and if we use the periodic system, if we use what we refer to as a perpetual inventory system, then any goods for resale that we buy are going to be recorded in the inventory account. So where the question is silent, right, and they haven't told us which what are we using, then we always assume it's perpetual. All right. So when I prepared this, I did not realize that. So we always assume it's perpetual, and when it's perpetual, then it's gonna be recorded in the inventory account. Always remember this. If the question is quiet on which inventory system is being used, then if you buy goods for resale, we record them in the inventory account. But if the question states that we use the periodic inventory system, then we record it under the purchases account. All right. And remember, purchases is an expense, right? And inventory is an asset in the way we record it. So if we buy inventory, our assets increase, right? That is if we are using the perpetual inventory system. But if we are using the periodic system, if we buy merchandise for resale, merchandise is obviously for resale, then it's a purchases account where we record it is an expense. So our expenses increase. So if you want to look at the effect of a double entry of buying inventory or goods for resale under the perpetual, all right, our assets increase. But under the periodic, our expenses increase. So this affects equity. This affects assets. But in this case, like I said, they did not specify. So where they don't specify, we're going to assume it's inventory. So we're going to debit the inventory account. My apologies there because I put in purchases. It's probably because I tried to do some editing. So maybe when I edited the question, this is a question from a previous assessment. So I probably edited some. I do not remember. Maybe they were saying the entity uses a periodic inventory system, and I didn't see it. So if the entity uses a periodic inventory system, this would be correct. But if the entity uses a perpetual, then this account would be the inventory, and this would be the inventory. And of course, trade payables control is what we owe. We owe 400,000 for inventory or for purchases. That's how we construct the general ledger account. Then there are also those transactions where people pay and they receive a discount. So ABC traders paid off 30,000 in full settlement of what they owe, which is 32,500. So you need to record this in the books of ABC traders. Okay, so first thing is that we know that in our bank account, money has gone out. Right? So we know that a bank is involved. And we also know that we owed these guys. We owed some people 32,500. So that's our suppliers. So trade payables control is going to be included. But if you look at the amounts that we owed and the amount that we paid in full settlement, it means we were allowed a discount. We were given a discount. We owed 32,500. So maybe we paid in time and they gave us a discount of the difference between this amount. And so the difference between the amount that was paid off and the amount that we were owing is the discount. All right, so we're going to have a discount that we received. Remember, settlement discount received is a benefit that we receive because we are the ones who are paying. So we have three accounts there. So we were owing 32,500. All right. But now we no longer owe that. In other words, our trade payables have decreased by 32,500. Our trade payables control is a liability. So when a liability decreases, you have to put it on the debit. All right. So we have to enter the amount here on the debit, and then we have to say which accounts were credited. So we know that the bank account was credited and also the settlement discount received. So this is a case where we have more than two accounts in a transaction. So the actual amount of money that went out is 30,000. So we record that in the bank account. So if you go into your bank statement, you will see the 30,000 that we paid, right? And obviously we put it on a credit because bank is an asset. So the account that was debited is the trade payables control. In other words, we were paying our suppliers. That's the information we get from this entry. We paid our suppliers 30,000. But remember now, the debit side is 32,500. The credit side is 30,000. So the balancing is the settlement discount received. So we received a benefit of 2,500 for paying early. And so we were paying our creditors and we paid early. So this is the account that was debited. So if you look at the total on your debit and credit, your debit is 32,500. Your credit combined is 32,500. But it has been split into the actual amount of money that was paid and the benefit or income, kind of income. All right. So it's a benefit which is more like income. That's why it's on the credit side. So we actually made a payment and received a benefit. Right. So we cleared what we owed. So it's something that you need to know whenever there is a payment that is made to settle an amount which is bigger than the payment, then there's always discount. Because we are paying our suppliers, we are the ones who receive the discount, right? So it's settlement discount received. You must distinguish that from settlement discount granted, where we grant our customers. So our customers pay, they pay us, and they pay, and we grant them a discount. So it's now us who are granting them to say, okay, you can pay us less. So it's more like a loss that we make for giving them. So we were paying off our suppliers. It's settlement discount received. All right. So here's an example of a settlement discount granted. So a debtor, somebody who owes us, settled an account of 50,000 and received 5% settlement discount. So you want to know how much he actually paid. So the debtor paid 95%, right? The debtor paid 95%, and we gave the other 5% as a benefit to him, as a loss to us, to say, okay, instead of paying us 95,000, or instead of paying us 50,000, you can pay us 95%. So we actually received in the bank account we received 47,500. And this is a debtor rate, so it's trade receivables control. Then we know that there's a difference there of 5%. And we know that it's settlement discount granted, right? Because we granted it to our customer. So trade receivables. So we are saying that this settlement discount was reducing the trade receivables control. In other words, it's a debit that we make to it's more like an expense, because whereas we're supposed to receive a 50,000, then we go on to receive just 47,500. So it's more like a loss, but it's a loss which we decide to give to a customer to encourage them to pay in time. So that's why it's on the debit side. It's like an expense. So the credit entry is made in the trade receivables control. So in the trade receivables control, we put in the full amount that was settled, not necessarily paid, but settled, the full amount that was owing, for which we say, okay, we will cancel that amount. Pay us this, and the difference is fine. You may not pay. So when we come to the control account, we put in the full amount. Right? So in this case, this was trade receivables control. Somebody owes us, right? So this is our asset. Now we are reducing this asset by 50,000. So we make a credit entry in the account. And we say the debit entry was made to bank and settlement discount granted. So that's how we do the balancing. Would you like to try this as well? So just a few questions. This is part 3. Then part 4 will give us an idea into the construction of a trade receivables control as well as trade payables control accounts. And then we would be done with preparing general ledger accounts. So what that would mean is whatever you get, you should be able to apply the principles, the practice, to be able to construct the correct general ledger accounts. So we know that you guys can have questions, so you can join our groups. You can join our groups. In our groups, we do answer your questions. Okay, and you can also join our class, where obviously we pay a more complete attention to you. But whatever works for you must work for you.